All right, guys, it is 6 o'clock, and we are here for our Tuesday meeting. And it's pretty exciting that we're doing these things weekly now and not just monthly. It is going to take us probably the next couple weeks to get all this figured out because every week we seem to be using a new platform. So welcome, everyone. We'll give everyone a couple seconds to get in here. It is 6 o'clock, and then at 6:01, Patrice will jump on here, and she is going to let us all know how to use this awesome technology and give us some housekeeping and tell us all about everything. Let's give everyone just a few minutes to get in here and get dialed in. One thing I love about these video calls, I love that when people come on camera, I get to see everyone's office and stuff and see how cool everyone's living.
Bedroom.
It's pretty, I don't know who this is down here, but I love that that tongue and groove wood ceiling. That's pretty freaking neat. I like that. I don't know whose that is, but I like it a lot. Hi, Patrice. It is 6:01. You want to go ahead and kick it off here?
Absolutely. Hey, good evening, everyone, and welcome. We welcome all of our members and our guests to this week's webinar. The purpose of this weekly meeting is just to keep us all connected, especially in a time like this. We want to make sure you get the information and the resources that you need in order to help you to keep sustaining yourself financially and to build your business at the same time, because it's possible even during this time. Our topic this evening, it's all about money. So specifically, we're going to be talking about how to get it from your tenants and how to find it to fund all of your deals. Now, before we dive in, I wanted to just share a bit of a walkthrough of the agenda for tonight. We're going to have our topic hosted by Rob the House Guy and our guest panelists. We have Rich Bailey as well as Andrew Zebo who will be joining in, along with anyone else who is participating in the panelists discussion at that time. We're going to try to keep that segment to 20 minutes so that we can get to our Q&A session, which is so important for us because we want to be able to hear from you. We want to be able to field your questions, and I'll tell you shortly how you will submit your questions. But we want to be able to field your questions and answer them while we are on this webinar tonight. No worries if we're not able to, because we do have a hotline in which I'll provide you with that phone number here shortly. After our Q&A segment, we'll just talk about deals, as well as we're going to share with our guests tonight how to become a member, okay? Because we want you to join us. All right, so how you can participate in tonight's webinar. At the bottom of your window, when you hover your mouse over the bottom tray, now some of you, it may be freestanding there for you. If you have a question, we're going to ask that you click on the Q&A icon. When you click on the Q&A icon, you'll be able to type in your question and submit it. During our Q&A segment, as I mentioned earlier, we'll answer the questions that are submitted to us at that time. Definitely feel free to use chat for your feedback, any comments that you have, but we want to ask you to please present your questions in the Q&A box, okay? Now, if Rob happens to call on you or any other person from the panelist area, there is a raise your hand button as well as a feature for you to just raise your hand, and then we'll go ahead and make sure you're able to talk and be seen if you'd like to. So at this point, I'm going to go ahead and turn it back over to Rob so that you can go ahead and begin our discussion for our topic of this evening.
Awesome. Thanks so much, Patrice. The one thing that we did mention about when you're in the Zoom webinar chat, it does say on here to panelists, or I'm not sure if you have the same view as we do, that you can do panelists and attendees. Is that what everybody has out there? Make sure that you're sending your right messages to the right people. As I was saying, because mine keeps flashing around, and like I said, I'm not a techie guy. So, all right, so tonight is all about the money. And we were going to start out, we were going to talk about rent and stuff. I think I'm just going to do a special video on that and shoot that out here maybe tomorrow and not burn up the time that we're allotted for this conversation, because I really believe that the market's going to stay pretty stable for the real estate, especially for the buying and selling of investment properties. I don't think it's going to dip down like 08 whatsoever. I think this is nothing like 08. People ask if I'm worried right now, and I think that's like asking Charlie Sheen if he's worried about the coronavirus. I don't think so. This is just a blip on the radar screen, and things are still moving along pretty aggressively. However, there is going to be some scared money coming up here. And what I mean by that, there are investors that are scared. I've already had one of those calls that they maybe lost their job. They've watched the stock market just wipe out all of their retirement. And now they're just reaching for anything they can liquidate and try to get cash. And that's where you need to be ready to step in. And if you're not liquid enough yourself, which a lot of people aren't liquid right now, you need to be able to find that money and find that money in a hurry, because to have the speed and ability to close quickly and do it cleanly, you're going to get the best deals and get to take advantage of these situations of people that have to liquidate fast and get out of the market. So we have a few people on here today. We have Andrew Zebro. He's on here. Andrew, why don't you go ahead and introduce yourself? Tell us a little bit about your background.
Hi, everybody. A lot of you know me. Freeland Ventures is a sponsor of Greater Cleveland RIA, one of our favorite groups, actually. So happy to be here today to be able to talk about private lending. I'm an investor myself. I own investment properties, short-term rentals. I work for Freeland Ventures, Freeland Lending. We do lend on fix and flip, on rental, residential, and commercial. So I'll be talking today about the private market, the non-QM market, and answering any questions that you might have. Thank you for having me here.
Okay, great. Let's jump next to Rich Bailey. Rich, are you there? Can you unmute yourself?
I am here. Can you hear me at all or no?
Yep, sure can.
My video is not working for some reason, but yeah, Rich Bailey with Fairway Independent Mortgage. 15 years in the mortgage industry. I have rental properties myself. I've flipped, I've sold, I rent. So pretty good rounded experience, I think, for the group.
Awesome. Thanks so much. And do we have Mr. Markowitz on here from NEO Financial? Did you show up here, sir? He is not. He may not get in here at all. So that's great. So we're going to talk to these two gentlemen then. Mr. Zero is going to represent more of the private money side and talking about doing the hard money loans or the non-QM, if you will, while Rich is going to talk more about the traditional lending. So to start out, Andrew, why don't you explain what non-QM is?
Yeah, so, you know, we're a private money lender. A lot of people ask, are you a hard money lender? Yes, the answer is yes to that. Let me just clarify what those terms mean. Typically, when you talk about hard money, you're talking about institutional private money. So it does act in some ways like a bank. There's underwriting guidelines, typically an office, a number of people who work together, not always, but they do follow some underwriting guidelines that are used by the banking industry. True or private or other private money, you know, that could be your family member, somebody from church that you know, a coworker. They're not savvy about real estate. You're expected to really secure the asset and secure the loan. They're lending to you because they know you and trust you, and they just want to get a better return for their money, but they're not savvy enough to really underwrite the loan on their own. So we are a private hard money lender. We do some things like banks do, but we tend to be more creative, tend to be a little, let's say the parameters are a little wider. We can do distressed properties. So, you know, there are advantages of using us in some situations.
Well, let me ask you real quick. Let's dive on this here, Andrew. And then,
Sure.
So let's pretend right now somebody comes along, a house in Parma. Parma's a great West Side neighborhood, very strong, and they can get this house for 65 grand, and it probably was selling for 120,000 bucks 2 months ago pre-virus. Take us through a 30-second answer on how quickly could they get the money from you to do this, and how much qualification is going to be needed.
It's a great example because I wrote a loan this morning for a house in Parma.
There you go.
Yep, it was a short sale. 78,000 was the winning offer. About 15,000 in rehab with about a $140,000 ARV. A little bit bigger house, 4 bedrooms, 2 baths. Great deal. Less than 70% wrapping in all the loan costs and fees into the loan. The answer is we can act pretty quickly because our money is in-house. We're not a committee. We're not a large institution. We can make moves fairly quickly because the money is invested in us by a whole number of private investors who trust us to make wise and safe, conservative lending decisions. So in this case, they did need a fast close because another source of their money fell through. So this loan is already in process. We knew the borrower had done a deal with us before. We didn't have to look at them as a new investor, a new borrower. And we're looking at a turnaround time of potentially just a couple weeks to close out this loan, get them the money to purchase the property, put the rehab budget in escrow, and start the project.
Okay, great. Now, on that 2 weeks that you're talking about, are you doing an appraisal? And if so, is it a drive-by or is it interior and exterior?
We don't have to. It's in our guidelines that we're allowed to do as long as we establish value by a professionally recognized method, which in our case could be a desk valuation. Parma's pretty close to us. We know the values. We can run a CMA. We could do a desk valuation. When time is of an issue, we tend to establish value quickly if the appraisal is going to cause the loan to take too long.
Awesome. Thanks. Now, Rich, this is a question for you, sir.
Yes.
Is there a way through traditional lending right now to take advantage of a rock star deal in a hurry? Clearly, it's not cash, but if someone saw a house, let's move on over now to Strongsville, and it's going for $100,000. Normally, it's going for $180. Are you guys backlogged with FHA and the Kuhn type loans, or is it still pretty possible to get done?
Nothing's getting done too fast right now in the mortgage industry. What happened here is, aside from the coronavirus, of course, we were moving into the busiest purchase time of the year, and then rates dropped crazy low, and we're buried in refinances too. So we're wrapped. Fairway literally closes like 14,000 loans a month, and we had refinances coming in faster than purchases. So now we're looking at trying to close 30,000 a month with the staff to close 14,000. So, and that's everywhere. Every lender is going to be like that. And so nothing's going too fast. Purchases are always given priority over refinances, but you're still not going to get nothing done less than at least 30 days for sure. And then there's some really bad turmoil going on in the markets right now in the mortgage-backed securities market, with anticipation of hundreds of thousands, if not millions, not making their mortgage payments. And so you're going to see some lenders fail in this time period, actually. So it's really right now, the non-QM stuff that we could do, we had some programs, and they'll come back, but we had some programs where you could just use bank statements or other creative source of income to qualify. That's all gone from the market right now until everything stabilizes. So basically straight conventional stuff, but the 20% down, it's a good way to go if you're trying to buy an investment property. But other than that, there's nothing creative right now, probably for the next month or two until the market stabilizes from all this Corona stuff.
Awesome. Thanks, Rich. Now, if I may, I'm going to probably just try to pull on someone here. Jill, I see you're on here. Do you care if I ask you a couple questions and you become a panelist?
Sure, fire away.
Okay, awesome. So we have Jill Bennett here. She is the founder and the owner of the iPlan Group, which she never blesses us with her presence at our meetings, but she always has someone there. So being in that business and having a lot of self-directed 401k, solo 401ks and IRAs, how do you see people reacting to this? Do you see them pulling back, or their willingness to lend right now in this market?
That's a great question. I see them willing to lend. They're looking for a stable, secured investment versus the volatility of the stock market. We have a lot of clients also taking some excess cash, diving into the stock market that normally just do real estate, thinking it's a good deal right now. But also with the CARES Act that just passed on Friday, there's lots of nuances and changes to IRAs where you can take a penalty-free distribution. You can take a loan from your IRA and pay it back over 3 years, or pay taxes over 3 years versus paying the taxes right now for a distribution. So there's lots of nuances with that. Call us if you have specific questions. But no, people are looking for secured real estate alternative investment, and there's this kind of volatility in the market.
Awesome. Now, are you seeing anybody, because there for a long time, you have people that will have a long-term job they'll be there for 18 years, and they might have $250,000 in their 401k, and they cannot do a rollover without quitting their job, and clearly they're not going to quit their job. But now with the ability to pull $100,000 out of your 401k and set to pay it back, are you the one that wants to pull money from that and start doing some stuff and funding solo 401ks over in the self-directed world?
That is absolutely about to happen. We haven't seen it hit yet. People are still scrambling and filing for unemployment, but that's a lot of 401k money into the marketplace, and it's a great opportunity for you to borrow from them, from their 401ks, because they'll be able to roll it self-direct and loan it to you, or do their own real estate deals as well.
Awesome.
Huge
Now,
opportunity coming up. It hasn't hit. We haven't seen it hit yet, but it's coming.
awesome. Hey, can I jump over and ask you a question, David Streeter? Oh, you got to unmute yourself, sir. Can you unmute him, Patrice? David Streeter.
There we go.
There you go, man. All right. So welcome. We have David Streeter. He is a local real estate attorney on here. So when we're talking about this, and you hear talking about private money and people that might have money in their IRAs, they want to lend it. As an attorney, what would you look for these people? What kind of advice would you give them? Clearly, you're not representing them. You're just talking for entertainment purposes at this point, that they would want to have in place to lend money out of their IRA or personal bank account or off an equity line at this point.
Well, what do you mean? Like once they have a deal, how to structure that transaction?
Yeah, when Joe Smith goes to his rich uncle and says, "Hey, rich uncle, I can buy this house in Parma for $67,000, and I need to borrow that money from you." What should rich uncle have in place? Because there might be some people out here that don't understand exactly what they need to lend.
Okay, that's easy. And I'm glad that it's his uncle, so we don't have to get into a big SEC discussion. So we're assuming that this is prohibited or permitted here. So at the very least, they want a note and mortgage, a promissory note to evidence the debt, a mortgage to then secure the debt. And I always like to back that with a separate loan agreement. Just like when you go to a lender, they're going to have you sign, a loan commitment loan agreement. That is your contract between the lender and the borrower. So that is your legally binding contract. And then you back that up with the promissory note, which evidences the loan. That's have all the terms, the interest rate, the payment dates, the length of the loan. There's monthly payments, if it's interest deferred, things like that. And then obviously you want a mortgage to actually be recorded. I'm working on the transaction right now where someone loaned money from their IRA and they never did a mortgage. And so now they're trying to enforce, their debt, and they're finding out that it's unsecured because they never talked to the right people when they were setting it up, and they basically loaned, money from their IRA, and it's not secured against the property. Now there's a problem. There's no security for it. So you have to make sure you need that at a minimum.
Wow, and that's what you do. People can reach out to you, and you can help them put that together.
Absolutely.
Awesome. So David Streeter, he's a member of the group. He's easy to find here. So Andrew, question for you again, sir. Now that we're watching all the rates fall to basically money is free, how is that affecting the private loans? Are you guys nearly free as well? Are you not at 15, 12% anymore? Are you giving money out at 4 and 5%?
Yeah, free is always good, right? we get it in other ways. We don't have to want to call my cousin Anthony. No, it's not free. We're not as pegged to the federal rate as some people think. And you have to keep in mind the federal rate isn't necessarily what your interest rate's going to be on a loan. The banks have to make money by charging above that rate, and they have to hedge their risk as well. So even though the Fed is lowering rates, there's more risk now because of unemployment and everything else that's happening in the mortgage industry, in the real estate industry. So, the short answer is no. If anything, we're expecting rates to tick up slightly, again, as a function of risk mitigation. We've already gotten word from a couple of our lenders that there's going to be some adjustments. So typically the way that a lender will manage risk is you look at a few different things. The rate is one. So as the rate goes up a little bit, you chase out borrowers who aren't certain that they can get the property to make that rate work and cash flow. Number two, you have LTVs, loan to value, and that's how much leverage the loan will be on the value of the property. those LTVs are going to come down a little bit as the lender doesn't want to be so exposed. So we've already seen some adjustments there. You're not going to be able to get as much money as you could before relative to the appraised value of the property. And then number 3, credit scores. You know, we were lending on credit scores fairly liberally, but now that's looking like we're going to bump our minimums up again. All those 3 kind of work together. They're levers that work together to help the backers of the mortgages feel more certain. So just one quick note, you started off your question with me about fix and flip, but I just want to note that's short-term money just to turn a property around, but we also do the long-term lending as well, the 30-year fixed mortgages. I think Rich will agree with me that they're looking for safer loans, and anything to make, you know, the backers of those mortgages feel a little bit better. That's what we're going to start seeing.
Now, Rich, with a lot of these lending, you said that purchasers are taking over the priority for a refinance. What are you seeing right now with cash out refinances for folks? People want to pull money out of their investment properties. Has that dried up a little bit because of the scare?
Well, I'm doing a cash out refinance for a guy that wants to use it for investing. He's an investment manager actually right now. But haven't really seen a lot of cash out refinances on the investment properties anyways. You know, you're looking at rates and points on those, especially right now with risk. Anything with risk has crazy high rates and points involved as well. So a few weeks ago, that wasn't the case necessarily, but you know, I don't think people were prepared for this to happen. Or if they were, they might have taken money out at that time. But same thing we're seeing is the credit score minimums. You're going to see a lot of lenders, if not all of them, go to a 660 minimum on government loans. We did today actually was our starting point for that. I had some guys do it last week. I got an email today that get the name of the mortgage company. Probably shouldn't say anyways, but anything under a 640 credit score in their pipeline just got closed out. Won't close. I don't care. It doesn't matter where it's at in the process. It's done. It's not going to close under a 640 credit score. Jumbos. We had $110 million in jumbo loans last week that they locks on because there's no market for jumbos right now.
So let me define a jumbo loan for those folks. Jumbo loans are the people that are buying the big houses in Westlake.
Well, it's anything. I believe the limit is 510,000 for conventional. Might be 525, but thought I had a note here somewhere for it. But anything over that is considered jumbo, non-conforming. So if the loan amount is going to be over I think it's 525. It's going to be over 525. It's going to be in jumbo pricing.
So when you talk about somebody that is going to have crazy rates for pulling money out right now and something that looks a little bit risky, what is a crazy rate to you in the conventional world?
So I have a guy right now. I did his docs yesterday. He's got a 689 credit score. 20% is buying a house from his folks, and his parents are giving him a gift of equity at 20. He's at 80% loan value with a 689 credit score. He's at 5.5 with a point right now. Whereas I got a guy with a 760. It's a little bigger loan amount, but with a refinance, he's at 3.25 in the same day. So and that was both conventional. So the lower score, you know, anything really under 700 is starting to get away from conventional making sense. But FHA's mortgage insurance is so high, if you avoid that, your net effect is a lower payment by staying with conventional with the higher rate. So anyways, I did his docs and we're going to float it, you know, hopefully in a few weeks the rates will stabilize and he'll get a better deal. But, you know, right now that's a pretty early rate when you're talking on the other side of the spectrum being 3.5 or 3.25 to 3.8% in a lot of cases. So
I think it's funny though, because it's really all we're dealing in our minds is we're living on perspective. It's all our perspective. I've been doing this since the mid 90s. And I remember there was a time in 99, I would go over to what we might classify as a war zone in Cleveland, somewhere that you wouldn't want to buy. And there'd be a house for $30,000. I would run there to see the house because the house was only 30 grand. I can't believe it. It's that cheap. Because at the time we were selling that stuff back in the subprime days, you could sell them off for $79.9. and get someone with a 550 credit score bought. They'd go ahead and finance something like that. Well, then the market shifted in 2008, and when everything fell apart and those became $5,000 houses, now I'll get offered a house over there for 20, and that'll be like a call I'll make to return that call if I have time throughout the day. I'm like, maybe. So it's all really perspective. So when you say 5.5% is crazy rates, that's an amazing rate. It only seems crazy because you're seeing 3.5.
It is. And that's
a great rate, really,
customer,
for someone that's risky, if you will.
Right, exactly. I bought my first house at 10% in 1991. So it's all perspective.
If you were around long enough to remember Jimmy Carter coming out of his administration, I think it was like, what was it, 18% coming into the Reagan years?
16 to 18%.
I mean, what was private money back then? But here's the thing. The one thing you have to remember is it's really about the availability of the capital and not the cost of the capital. Because if your deal is so lean that a couple percentage points are going to wreck your day, then it's probably not a deal to be involved in. And it's hard to look at the lender. Like, you got to think of this. That lender whether it's Zebro or whether it's your rich uncle or whether it's Bailey, whomever it is that's doing the deal, if you're buying that house, and I keep going to this Parma house, this mythical house at $67,000 in Parma. By the way, if that exists and I offended you, don't tell anyone about it. Reach out to me. We can meet at the house tomorrow. I'll give you a personal apology if you have a $67,000 house in Parma for me. But if a house like that you're getting for $67,000, it needs paint, cardboard, maybe $10,000 in it to make it work back to like $120,000, and you're giving Zebro 10, 15, 20% interest. Let's say you're borrowing $100,000 on this house. Let's go crazy at 20% interest. What's it really costing you for 6 months? Nothing. 10 grand. I mean, it sounds like a lot, but if that's the money you needed to get the house bought and fixed and cover your carrying costs, you're way ahead of the game. It's a whole lot cheaper than a partner, because I literally have people coming to me and it'll be them and their brother or them and their buddy or whomever it might be. And they say, we're going in partnership. And you don't know how to say it in a nice way, but you're looking at both of them and you're thinking, one of you is dead weight. They're bringing nothing to the table. They don't have money. They're not planning on really working on the house. Why do you even have this deal? I go get a hard money lender and get a loan at 15%. And they start freaking out saying, well, 15% is too much. I'm like, well, you're getting 50% away for nothing.
Yeah.
So let's not get caught up in the rates. I mean, it's all just hocus pocus for guys anyhow. I mean, what the heck? I don't follow the stock market, but if you do watch a little bit, Royal Caribbean's been going up. It's going up and down and up. Why in the world would a cruise line go up right now? Did someone on here book a cruise? Probably not. Is the government going to bail out a company that's not even based here? It's based offshore? Probably not. But it's all speculative stuff. So it's all just made up numbers anyhow. So let's just see what if the deal makes sense and we can get it done regardless of the rate. So there's a little plug for anyone that's charging too much on here. Did we end up getting Markowitz on here? Did you raise your hand? He was supposed to be on here. No, he bailed on us. He's one of our gold members, and he wanted to talk all about this. So, all right. So, Zebro, now that I've talked about rates on here, what could someone expect? Give me a 30-second answer, not a real long one here. And Patrice, you can just tell us when we're starting to run out of time, or 20 minutes, we'll go to Q&A, all right? Just make sure you remind us that. So on this, how long do we have?
About 5 minutes.
5 minutes, okay.
A little longer because we don't have a lot of Q&A right now.
All right. So, Zebro, so let's start with the short-term money.
Yeah.
If someone wants to get a house, to buy, fix, and flip, first of all, I'm just going to shoot questions and you tell me answers. I'm borrowing from you.
Okay.
Okay. Score driven for a fix and flip?
Not really. 600 maybe.
Okay, 600 score. Do I need money down?
You do 100% loan, but you got to have money in the bank to start your rehab and be able to float soft costs and have some reserves. We look for about 12 to 15,000 in the bank.
Okay, 600 score, 12 to 15 grand in the bank. How many points?
3 points, 13% APR.
13%. Is that interest only?
That's interest-only payments. Yep, annualized.
Analyze. And what type of balloon?
We have a 6-month term, but can be extended to a year.
By extending it to a year, am I paying for you to extend it to a year, or are you just being a good guy and extending it for a year?
You know this too well, Rob. No, you pay points for extensions, but we're not, we have 150,000 maximum loan amount now. So we're not doing the high-end riskier type of flips. So we're expecting you to be get in and out of the project.
Okay. When you have the money in escrow, I'm assuming that if I'm buying a house for 60 and I'm putting 40,000 into it and it's worth 150, that 40,000, I'm starting my rehab with that 12 to 15,000 I have in the bank, right? When you're getting draws, you're doing inspections, I assume. No, just pictures.
Self-reported, no inspection fees, no inspector.
No inspection fees. Okay, perfect. So no inspection fees. Everything's cool then. It's interest only. Do you have a fully amortized product on the back end that you could replace the short term with?
Yeah, that essentially was the reason for limiting the loan amount and really getting into income loans, income cash flowing properties. So the idea there is if you do have a house that needs work, we love the BRRRR strategy: buy, rehab, rent, refinance.
Hey, Patrice, can you mute everyone except for Zebra and me, please?
Thanks.
Okay.
So we do prefer those loans where an exit strategy could be to keep the house, keep it as a rental. And with that in mind, you know, with that 660 that Rich Bailey said before, it's kind of where we are on minimum credit score as well. So that's why with a fix and flip, we won't go down so low, because if you have to get out of that, you can't sell it. You need to keep it as a rental. You have to be able to qualify to get out of our loan. So we're looking out for you know, a successful exit strategy from our loan, whether it's a sale or a hold to keep the property.
Okay, excellent. I know that anything that I'm involved in, I buy and sell a lot of properties, and I'm a buy here, pay here, kind of like one of those car dealerships. So I have financing with any of my deals, whether it's through me, one of my people, sometimes one of you guys. I think right now, I think you're actually involved in the deal I'm involved in. We'll talk about that later. But at any rate, so we have money anywhere from, you know, 9% interest only with a 5-year balloon, and it's going to cost you some points, but it's all non-recourse, and we can lend inside of an IRA or 401k. So that's good stuff to get you out. Because let's face it, most people aren't going to keep their rental properties super long term. They're going to either refinance it or sell it before then. So that's always a good option. But I would definitely, if you're going to light that fuse on the dynamite on one of those 6-month balloon type things, have a great exit strategy. Now, your exit strategy might be that you or your partner have a good enough credit score that you could go to Rich Bailey, which I'm going to talk to in a second, that you could go to him and qualify to get out of that loan. Or you just want to have that thing so ridiculously juicy that you know you can sell it even in a down market. So for instance, if right now you had a home that was in Tremont, let's say, and it was all fixed, finished, and true Tremont, like really nice over there, and you were all in for $90,000, it wouldn't matter what. You know you're going to get your money out of that. You know there's going to be someone that's going to buy that property from you. So just don't ever put yourself in a situation that you're in a house that's on fire with one exit strategy and it is like tight to get out that door. So mentioning that, Rich, we can unmute you for a second, sir. I want to ask you, to get people out of these loans, what is someone looking at in today's market? I know you were saying like a 660 minimum score for a lot of that, the Fannie and Freddie stuff. What's it going to take for an investor to refinance without a year's seasoning on a property he has fixed up?
So technically the 660 minimum for us is on government loans. So if you're doing an investment, that's going to be conventional. So I'm assuming, I have not heard or confirmed, but I'm assuming we could still go down to as low as 620 on a conventional. That's a good question for me to ask actually on management on that. But So basically, we're looking at 20 to 25% equity. You know, you have to have at least a decent score, because if you're talking especially a multiple unit, there's points involved in that, and we have to stay under points and fees and average daily rate and stuff. So you might even, if your qualifications aren't strong enough, you might not even be able to get the loan because we'll be out of those ranges. But so anyways, for the most part, you need to have at least the 20% equity. 25 is better. You'll get better terms at 25% equity. And qualifying income. And, you know, it's like buying your own house that you live in almost. So
Let me ask you, Rich. Let me ask you
bigger
something
equity
here.
requirements.
When you're talking the 20%, let's just go to that magical $100,000 house that doesn't exist anywhere, but it's a $100,000 house. And someone had bought this house for $40,000 and they put $30,000 into it. So they're into it for $70,000. And they've owned it for 6 months. So when you're talking about someone that's doing an 80% loan to value, are they going based off of the purchase price plus what they put into it, or are they going off the appraisal price?
That's a good question. So it used to be a 12-month requirement in order to use the actual appraised value, but now that is down around 6 months. So if you've got 6 months ownership in it, then in most cases they'll take the actual appraised value on that. So
Okay,
it just depends on different lenders' guidelines, I think, for that. But Fannie Freddie is a 6 month requirement now.
6 month seasoning. Awesome. I think I'm reading some of our stuff. I have one of my private ones here. Someone asked what seasoning was. And seasoning is just the amount of time that someone has held the property. So from the time
Recorded in title, yes.
recorded in title, exactly. So if Joe Smith or Janet Smith buys a property on June 1st and then they're going to refinance it on July 1st, that's 30 days seasoning. If they're going to go to June 1st the following year, that's 12 months seasoning. And clearly, the longer the seasoning, the more excited the lenders are. Would you say, Rich?
Yes, yes. And on the flip side of that, if you've already bought it and you're selling it and you've had it for less than 90 days and your buyer comes in with FHA financing, there's a very good chance that you're going to end up having to pay for an appraisal on that. The buyer's going to get an appraisal, and then they're going to make the seller also get an appraisal if you've owned it less than 90 days. Just FHA, by the way.
The FHA, I noticed that by accident this year, we had sold to a person, to a flipper, and they rehabbed it very quickly, and they put it back in the market, and they sold it very quickly, and they got hit with the double appraisal thing. So they're really protecting themselves.
Yeah, I want to
Well, they're protecting the consumer.
note,
Yeah.
if I could, about that. Could I just take a minute here? Because I have been getting this question lately, and I think there's a misperception out there that because we don't have any seasoning on the long term, that someone can just take a fix and flip loan with us to acquire it if they're getting it under 70%. And then because we do a 75% rate and term and no seasoning, they could just turn around and get the value to say, because, oh, we got such a discount on the house. It doesn't work that way. There has to be work done to the house to show improvement, because if the appraiser goes in and he knows, he sees in public record what you paid for it, and he looks at the house, he looks at the pictures, he knows you've done no work, he can't give you the value. You know, professionally, what justifies him giving you a higher value than what you paid for the house? You have to force appreciation through actual rehab. You have to improve the house. So yeah, you can do it quickly. You know, if it's just cosmetics especially, it might just take you a couple or a few weeks, put a tenant in, and hopefully, you know, you can get a good valuation in the house, but you don't get this magical in and out with no work done in the house. So keep that in mind. There has to be a rehab budget.
It is funny, and I know the individuals on this call, and I'm not going to call him out on it right now, but he's in the process of buying a property, and I'm talking absolutely stealing it. We walked through the house, and the house is gorgeous. Like he just did a great negotiation on this property. It worked out very, very well for him. And I said, really, your biggest problem is if you go to resell this right away, there's nothing you can show that you've done to this house to increase value. How in the world are you going to just add $125,000 to the purchase price and justify it with an appraiser in the next 60 days? So that it's kind of a kiss of death. It's a great thing, but it's almost like I've had that before. I bought a house one time. I'll tell you a quick story. I bought it at auction. They wanted $175,000 for the house. It didn't sell. The auctioneer talked this lady into doing an absolute auction for a couple of her pieces of junk stuff outside and the house. No one bid on the house except for a couple of us. They all bought lawnmowers that don't run and everything else for way overpriced. But I bought the house for $65,000. Literally, it had nothing wrong with it. It was gorgeous. I knew I couldn't turn around. So I did a 12-month rent to own on there. I put someone in that had a very good chance of being financeable within the next 12 months. Their score needed a bump like 30 points. That was it. They gave me $10,000 down, $1,500 a month, and then bought it for $179,900 at the end. That was my best single family.
Hey, Rob. Rob,
I need more of those. It happened once, and it happened like 15 years ago, so I keep looking for another one. That's my
Rob,
touch.
I have another example for that. I recently financed a house in Medina. There's a rehab company somewhere south of Canton. They're doing many houses, and they're doing these things in 30 days. They bought this house, rehabbed it on a major rehab in 30 days, and had it sold. In Medina, it sold in multiple offers. We financed that with no problem, but it was a gorgeous job. I mean, they did a really nice job. In 30 days, it was amazing, actually. So on the conventional side, you can do that without the seasoning. But again, there was enough work there that documented the increase in value.
Yeah, documenting the increase in value is the most important thing ever.
Bingo, right there. Yep. Show the appraiser what you did so he can go back with a clear conscience and have something to work with.
Right, absolutely. And hey, Patrice just mentioned on here that if you want to jot down the RIA hotline, if you have any questions whatsoever, there's something that you missed on here. This is a pretty crazy time for all of us because we're not out communicating and seeing each other for coffee all the time and everything else. And sometimes we all get caught on our cell phones. You can jot down 440-485-3443. That's 440-485-3443. That'll reach someone on our leadership team. So if you're having an issue with something, we can direct you to the right person that can help. Maybe it's an eviction, or you're trying to lend money and you need some paperwork drawn up, or you're trying to borrow money and you're trying to find a cash for a deal. Whatever it is, just give us a call on that. So Patrice, do you want to dive into some questions here?
Well, right now we don't have any in the Q&A session, so we can open it to the floor if you like.
I have a question for rents. So with my rental properties, I'm sure I'm going to have one or two folks that are going to say, "Hey, the government said I don't have to pay my rent this month." So what is the lowdown on that, Rob?
I'm going to give you my 2-minute spiel that I'm going to be putting on a video tomorrow. And I saw this from someone. I get on Facebook once in a while and talk to people about real estate. And there was someone on there that had a 32-unit apartment building, and all the tenants band together and said, "We don't have to pay rent. We're not going to pay rent." And this individual was completely freaking out, saying, "What am I going to do? I'm losing so much rent." And my answer is this, that let's pretend hypothetically that rent is $500 a month. So they're going to lose $16,000 a month, month one. I would be proactive, and I would go to the tenants and I'd say, "Look, we're all in this together. You're in trouble. I get it. You've all lost your jobs. You're having a hard time making ends meet. You're trying to buy food for your family. I get it. So how about we do this? How about we take the next 2 months, the next 60 days, and we let you out of your lease. That lease you're out of. But at the same time, we're going to sign a brand new lease here starting June 1st. June 1st, you sign a new lease for 12 months at $600 a month. So forget these 2 months. Just pay me $600 a month the next 12 months. And after that year, we can talk about it again and see where you need to be. But that's what we'll do to work out. So you have 3 options here. Option 1 is I give you a 3-day notice for not paying. I know I can't file the eviction right now, but mark my words, I'll file it as soon as the courts let me. Option 2 is you can just pay me the $500 as normal. Nothing changed, we're cool. Option 3 is you can just tear up these 2 months and you can sign and just start paying $600 a month in June for 12 months. My thoughts are most people are going to take that $600 a month in June, but here's the sexy part about it. In 32 units, adding $100 a month is going to add $3,200 a month to your net operating income. Take that times 12, that's $38,000 a year. If you're selling or refinancing that building on a 10 cap, You have added a $380,000 value to that building by giving up $32,000. So your tenants are literally making you $350,000 richer. So it's really not a bad thing by just doing a forbearance agreement and then spiking it up a little bit, in my opinion. So that's what I would suggest doing, is being proactive and being a good guy or girl and just going to your tenants and being cool with them. Any comments on that, or challenges, or look,
Impressive.
is there anything wrong with that if you're still on there?
I don't know, Rob. Sounds good in theory, but what would prevent them from taking that agreement and then ripping that up in 2 months and saying, nope, I'm not paying, and just forestalling it 2 more months?
Well, you're 100% true. First of all, you have to have a cancellation of old lease that's done. Next, you put the new lease into effect. Clearly, national and state law and local law is going to supersede your lease, which it would have superseded your $500 agreement anyhow. However, if all that stuff's over with now and now it's just go time again, now you have them tied to a 12-month lease at $600 a month or $7,200 for the year that they are responsible for until you can get it released. So you might get it covered for 4 months. If they're back to working, garnish wages, do whatever the heck. I'm not saying you want to be nasty about it, but I'm just assuming everything's going to be okay and a lot of that's going to work out for people.
Hey, Rob.
Yes.
Rob, it's Streeter. Hey, I love that idea. I think it's great. I've been having this conversation 100 times. I like your spin on it. That's something a little bit different I haven't heard. And Andrew, to yours, it makes no difference. But the reality is if they're not going to pay now, they're not going to pay in 2 months. At least you're documenting the change, which is going to put you in a more favorable light with the court once we're on the file again. And not to mention those, a lot of times you're a small business owner, and there's a lot of aid coming out under the CARE Act and with these SBA loans or the disaster relief loans, where you can get compensation as a small business owner to help hedge against all these losses. So this is a way not only to use some of the aid that's coming for landlords, which there is some coming, but then also, like Rob's doing, he's increasing his cash flow and NOI long term, creating that new lease.
Awesome. Let me have a question for all you guys. By, I guess, speaking out, how many people currently have a home for rent or for rent to own available right now? Does anybody out there have anything available? All right, Rich. All right. Well, Curtis, I know sort of, but I'm going to go to Rich on this one. So, Rich, are you getting any calls on it?
I posted it on Facebook, and I basically stopped answering messages on it. I'm not even going to try and rent it right now. It's a 2-bedroom in Lodi.
But people are answering. People are actually wanting to make a move right now.
Oh yeah, yeah.
That's good. And you're just not answering because you don't want to go
Well,
out and meet people?
Really, it's the quality of people that are trying to get it right now. So I know I'm just heading for trouble if I take some. Like, the fun thing about Facebook is you can kind of see what you're getting.
No.
You know.
Amazing.
You're not supposed to do that, I guess. They talk about like stereotype, whatever, but when you go on Facebook and you look at their profiles and they're there with all their buddies and there's a bong on the table, it's always kind of a telltale sign you probably don't want to lease to them. I do it for Facebook Marketplace too when I'm buying stuff. I look at how their lifestyle is to see, okay, do I really want this? What's this car been through?
Right.
Anyone else tried renting during this time or doing a rent to own during this time? How about?
So, we've got 7 short-term rentals, mostly with Airbnb, and obviously we got just crushed 2 weeks ago when all this started happening. So if all of you aren't aware, what Airbnb did on actually on a worldwide level is they superseded or overrode your cancellation policy and allowed total cancellations with no penalty to the guests. Now we have we had the most lenient cancellation policy. Obviously that attracts more bookings. So we had to quickly come up with a plan because our revenue went to 0 literally the next day. Not like, oh, somebody's in the house, they're paying their rent, whatever, thinking about the future, things might start getting rocky. This was immediate. Everybody moved out and no one paid rent, essentially. Kind of like that 32-unit apartment building, Rob. So we said, well, what can we do here? And we quickly regrouped. We slashed our rate and we made a 7-day minimum And within a few days, everything booked up. People sheltering in place, people without a place. And we went over market, what they'd pay in a regular rental. But the point is that you take drastic measures to, keep somebody in the house. So for us, it's working, and we've got bookings through April, actually. I think almost everything is booked. We're able to pay our bills, keep our lenders paid, keep the lights on, so to speak, and there's actually positive cash flow at the end. So a temporary measure just to stop the bleeding actually worked out really well for us. So people were needing to separate from a family and shelter in place. They were on a trip overseas, came back and didn't want to visit their family and potentially spread disease to them, and wanted a place to stay and quarantine. We had a couple people lost their place that they were going to move into because those people couldn't move out and fly home. So they were all of a sudden homeless, like overnight. So I know it's short-term rentals and not a regular rental market, but that's just a experience that we just went through.
I'm going to pause for a second. I see on a message board here.
Brad, we got some questions and comments.
The one comment's the best. I have to laugh at. The last one. Reads that one, Patrice.
We are offering this is from Michelle. We are offering 10% discount on rent in April if they sign a form to sign over their stimulus checks. Late fees waived also.
That's good. That's good. Oh, I see Peter on there all the way from out in Utah, where there is no coronavirus. That's a good idea. I like that a lot. Well, we got. Here.
What was that?
What's Kelly's question up there? I see him writing something.
Let's see here. Well, we had one that came in a little bit earlier. Any suggestion from Sherry? Any suggestions about Cleveland lenders for 10 to 20 unit multifamily for long-term hold, ideally non-recourse for SDIRA investing? Also SDIRA non-recourse loans for 1 to 4 units that will lend on older than 1940 long-term hold.
Yeah, I have someone that I can do that. They can call me because I have the non-recourse. Jill Banner might be able to turn you on to somebody as well. I don't know if she has any non-recourse lenders from that lend inside the IRAs.
Yeah, that's going to be really attractive, certainly depending on the rate. And also, people who had a lot of money in the stock market just lost 20%, and they're going to be flocking to the secured by real estate.
Yeah. So, Dad, you can reach out to me and we can turn you on to the right people there. Let's see.
All right, next one. Can you have tenants sign lease starting June 1st now?
For those of you who weren't paying attention to my 10-minute speech, yes. Yeah, you can do that. You can sign anything you can put in place. Just say, yeah, June 1st it starts. Yeah, you can do that.
Perfect. And then this is in response to your question about rentals. We had, let's see here, a couple of people that posted a house. One was for rent in Elyria recently and got 30 emails within 24 hours, found qualified tenants that were moving in. They're moving in 2 weeks. We had Michelle Finn. She put 3 families in rentals in the second week of March. And she got 1 rental that's 1 block away from Coventry right now. So looks like people are renting, and that's it. That's all I see right here.
Awesome. Awesome. Well, let's do this. I'm going to do this. Let's turn this over to Gary Newman and talk real quick. We're going to talk about some of our off-market deals. I'm still buying and selling like crazy. I did 3 deals in 5 days. I mean, and I don't leave my house. I'm one of these true self-quarantine guys that I'm not leaving. If I sign, I have remote closers come in, I sign, spray with Lysol, and come wash my hands. So I'm not going anywhere. So we are still doing a lot of deals. So we have some off-market stuff here. Gary, you want to tell people how they can post their properties, all the members? Want to unmute yourself?
You can go onto our website and post a property. If you click on the blue banner that says properties, you will see how to do that. You cannot go on the website right now. They took it down today to do some repairs, but it should be up shortly. If you have any questions or you're having a hard time understanding that, please call our hotline, or you can text me at 440-214-0730. That's all I got.
And then Also, so what we're doing with the website for the RIA members, that's going to be all the true off-market stuff. But for everyone else, we're going to have a Greater Cleveland RIA Facebook page where you can also post all of your properties and buy. And so it's all for Northeast Ohio, Cleveland area. Members or non-members alike can both go on there and they can post. The one suggestion I have, we're going to send that link out to you guys here later this evening so you guys can all go on there. Me personally, I would never, ever, ever on any Facebook page put the full address of a property. Because when you put a full address of a property, you're going to get all these folks out there that are wannabe wholesalers grabbing that and remarketing it all over the place and it's going to pass around. Give people a reason to call you, get their information, build your buyers list up that way, and build rapport with the person and let them know not to blast your property everywhere. But we are going to have a website out there as well. I mean, a Facebook page out there as well that we'll be sending out later on. Does anyone else have anything? That's it. But Gary's still looking like a young Harrison Ford. There you go. Does anyone else have anything out there they want to share anything tonight?
Hey, Rob, it's Susan from auction.com.
Hey, Susan from auction.com. How are you?
Good. How's everybody doing tonight?
We're doing great. How's auction.com doing?
Good. Well, I just wanted to give some people some updates. We might be the place to go for online purchasing now because no one's leaving the house, so might be a time to go check us out. You know, if for people who aren't familiar with us, we have the bank owns and the foreclosures. So as you know, the courthouses are closed down. It's like on a per county basis. There are some setbacks here, but we're dealing with it on a county level. So if you are currently did purchase a property with us and it is currently pending, it is on a per county level as far as what's going to happen with the closing date. So you can email me, and if you have any questions, and my email is on the member site. Vicki Daugherty is another one of auction.com reps. She might be on the meetings if I'm not here on these online meetings.
Yeah, I'm here.
She's from Cincinnati. So, you know, it might be a time that you can check out auction.com in the comfort of your own home. You can learn how to look at our website and navigate. I do want to let people know that we do have a new product. It's called remote bidding. Now, remote bidding is for you investors out there who want to bid in other states at their live auctions. You can actually sign up as a remote bidder and purchase at, say, a Georgia auction or at a Texas auction. So it's in the live price states that you can do remote bidding just right from your, auction.com app. So it's a new product, and if you want more information about it, let me know. It's in 7 states now. But keep in mind, we do have exclusive inventory. The foreclosure sales are exclusive inventory. It's with a private selling officer, and it's basically an auctioneer online. That's what we've had the ability to do for 2 years in the state of Ohio. So if anybody has any questions, let me know, and I can, our inventory has been postponed and canceled, Rob, just to answer your question. So in 2 months, you're going to see a flood of all these properties that were canceled and postponed come back up.
Awesome. Well, thank you so much for sharing. Thank you so much. I appreciate that. It's good information on there. We know we want to hit Zebra real quick. He wanted to share something real quick. 30 seconds. I always say 30 seconds because you're like a Baptist pastor on here. You just keep on going.
Hey, no, this is great information for everybody.
SBA loans, yes.
This just came out of the CARE Act. You know, they funded Small Business Administration, I think, I don't know, crazy amount of money. But they're giving 10,000 forgivable grants to businesses that can demonstrate any hardship. It's under the disaster program, and because of this, basically the whole country has been declared a disaster. So everyone in the United States is eligible. Your LLC has to have been established before, I think, January 1st of this year. The sign up is very, very quick. It's just a couple pages of information. And again, you tell them how much you think you lost. There's a number of details to fill out, but they're expecting millions of businesses to file for it. I think it just opened up yesterday. So get on there and get in quick, because there's going to be a really long line, and potentially you could get funded much quicker if you're first or very early into the queue.
I'm wondering if that would that work. Also, we had a question for landlords. For landlords that had lost rent, the 32 unit individual.
Yes, they're taking LLCs, and you just, I don't know what the verification process is going to be, but you state what you lost and fill out the application. You get a number. I imagine there's some follow-up, but probably with the crush of applications, they're going to be sending money out is probably, as quickly as they can. So get in there before the rest of America does.
Do you have the website, Andrew?
I don't, handy. Go under SBA disaster. Just Google that and it'll pull it up. There's also going to be money available just for business use. That's not a grant, but that's rather a loan. They're capping it at 4%. And so that could be used for the purchase of real estate. I'm assuming it's going to act like a line of credit.
I'll say this. I know there's two different things on that money. There's going to be the qualified spending on there, and there's going to be the grant spending. So I've been told to open a separate bank account just for that money, so you can really keep track of it. Because you might have some qualified spends that you'll have to pay back, but I think it's going to be capped at 4% over a 10-year amortization period. Right. And then there's going to be the just like, hey, here's some free money stuff. This is the Bernie Sanders spend that you don't ever have to pay back. It just comes to you. So I had to make a little political joke in there. I miss all the politics. All right. So anyhow, guys, anyone else have anything they'd like to say? Because here's what we're doing. We're bringing these to you every single week, not every single month now. That's a great thing. Second cool thing is that they're going to be all informative. These are never going to be a Tuesday night sales pitch. These are always going to be things to help you get through the problems that we're going through and to keep growing your business. And I can tell you, for me personally, I don't see bumps in the road. We are business as normal, except just social distancing and not going out and about. I know a lot of you are still running around looking at houses. That's cool. I don't condemn you for it. But we need to keep this going. Keep getting on Tuesday nights. We'll keep them to about an hour. They're going to be informative. We have a lot of things lined up. We have Randy Hughes, Mr. Land Trust. I know that you probably know him as the guy that would come and sell a course at the end of it. I've been in the business 23 years. He's been in 50 years. He's 69 years old. He started at 19. I talked to him last night and said, look, I'd love to have you do a webinar for about an hour. However, no sales. You can only inform and teach. And he was like, cool, I'll come on. I'm just going to teach everything there is, and I'm not going to sell anything at the end. So we're going to have people like him on there. We're going to keep bringing you things about laws as they're coming up and they're changing. And if you guys have any topics you'd like to hear about, you can reach out to us on the RIA hotline. Call us, email us, tell us. And there's no one that we don't have access to. We have just about every expert in the industry that we can bring on to help you guys between all the leadership team here. So guys, thanks a lot.
Hey, Rob.
Really appreciate it. And we'll see everyone next Tuesday for this meeting at 6 p.m. We may have some filler things here in between. I'll be sending out that Facebook link either later tonight or tomorrow morning to your email, text, however we get a hold of you.
Thank you so much from auction.com. We appreciate it. If there's anybody has any problems, please let us know. Thank you.
Thank you so much for bringing us up to speed on auction.com tonight, too.
Thank you, Patrice. You did a great job. You and Rob.
Oh, Patrice, you're a rock star. Thank you so much. This technology gets me.
Yeah.
And Gary, too. You did a great job with
Gary,
it.
of course, he has his cape.
And thanks all the panelists.
Yes, thank you
to everybody.
Thank you all for joining, all the guests. Thank all the guests, too.
Yes.
All the guests. Thanks, everyone. See you next week. Ending the meeting.
Stay safe.
See ya.